Hey everyone, welcome back to Easy Invest and Thrive, where we turn small, smart moves into big futures together. Let's dive into this week's $115 investing journey. This is week 3, so this will increase my invested money year to date to $345. As always, these are my personal moves, not financial advice. And I'd love for you to drop your own picks in the comments so we can grow and learn together. Sorry for the delay of the video, but as it was election day in Romania and the results weren't positive, so I decided to skip the Romanian market this week. Let's dive in. For the U.S. investment I choose, iShares MSCI USA Value Factor ETF, ticker VLUE. The iShares MSCI USA Value Factor ETF, VLUE, seeks to track the investment results of an index composed of U.S. large and mid-capitalization stocks exhibiting value characteristics. The fund employs a rules-based approach to select and weight stocks based on fundamental metrics such as earnings, revenue, book value, and cash earnings, aiming to provide exposure to undervalued stocks across various sectors. Current price. As of the latest data, VLUE is trading at approximately $104 per share. Why I like it? VLUE focuses on stocks that are fundamentally undervalued, offering potential for capital appreciation as these stocks revert to their intrinsic values. The ETF provides broad exposure across various sectors, reducing the risk associated with sector-specific downturns. With a competitive expense ratio, investors can gain value exposure without incurring high management fees. Performance. VLUE offers a more affordable entry point compared to broader market indices. The ETF has demonstrated consistent performance, reflecting the resilience of value stocks in various market conditions. Recent news. Analysts project an increase for VLUE. Key constituents like Corning Inc., GLW, L3 Harris Technologies Inc., LHX, and Elevance Health Inc., ELV, have significant upside potential, contributing to the ETF's growth prospects. Despite minor fluctuations, VLUE has maintained a stable trajectory, reflecting investor confidence in value-oriented strategies. Technical analysis. VLUE has established strong support around the $89.40 mark, indicating investor interest at this price point. The ETF's 50-day and 200-day simple moving averages are $107.98 and $105.08, respectively, suggesting a stable long-term trend. Consistent trading volumes reflect sustained investor engagement and liquidity in the ETF. Analyst expectations. Analysts anticipate continued growth in value stocks, driven by economic recovery and favorable market conditions. The underlying holdings of VLUE are expected to deliver robust earnings, supporting the ETF's performance. VLUE is well-positioned to capitalize on the rotation from growth to value stocks, offering investors a timely opportunity. Conclusion. The iShares MSCI USA Value Factor ETF VLUE presents a compelling investment opportunity for those seeking exposure to undervalued U.S. equities. With its diversified portfolio, attractive valuation metrics, and positive analyst outlook, VLUE stands out as a prudent choice for investors aiming to balance growth potential with risk mitigation. Passing to the European ETF, here this week I analyze VanEck Vector's Semiconductor UCITS ETF D, VVSM. The VanEck Vector's Semiconductor UCITS ETF provides exposure to a diversified portfolio of global semiconductor companies. It aims to replicate the performance of the VIS US-listed Semiconductor 10% capped index, encompassing firms involved in semiconductor production and equipment. Current price. The ETF is trading around $33. Why I like it? Semiconductors are integral to various industries, including technology, automotive, and consumer electronics, indicating strong long-term demand. The ETF includes companies from multiple countries, reducing geographic risk and capturing global industry trends. With the rise of AI, IT, and 5G technologies, semiconductor companies are at the forefront of innovation, offering growth potential. Performance. The ETF has declined by more than 20% from its peak in July 2024, presenting a potential buying opportunity. Currently trading at 26 times forward earnings, which is a reduction from earlier valuations, suggesting a more attractive entry point. Major holdings like Nvidia are expected to see annual earnings growth of 35% over the next few years, supporting the ETF's performance. Recent news. Despite recent declines, analysts view the semiconductor sector as oversold and anticipate a rebound. Potential Chinese retaliation to proposed tariffs has impacted the sector, but much of this risk is considered priced in. The increasing demand for chips in AI and cloud computing continues to drive growth in the semiconductor industry. Technical analysis. Technical indicators such as RSI 14 at 25.596 and Williams percent are at -92.287 suggest the ETF is in oversold territory. The ETF is trading below its 50-day and 200-day moving averages, indicating a potential reversal point. The ETF has found support range throughout the year, which may act as a floor for prices. Analyst expectations. Analysts expect continued earnings growth for semiconductor companies driven by technological advancements and increased chip demand. The current valuation is considered reasonable given the sector's growth prospects, making it attractive for long-term investors. Analysts believe that as earnings reports meet or exceed expectations, semiconductor stocks, including this ETF, may experience upward movement. Conclusion. The VanEck Vectors Semiconductor UCITS ETF offers investors a strategic entry into the semiconductor sector, which is poised for long-term growth. Despite recent market volatility, the ETF's diversified holdings and exposure to innovative technologies make it a compelling option for those seeking to capitalize on the industry's future expansion. Instead of the third stock, I chose gold. Gold has long been considered a safe haven asset, offering investors protection against economic uncertainties, inflation, and currency fluctuations. It serves as a store of value and a hedge during volatile market conditions. Current price. As of May 6, 2025, gold is trading at approximately $3,410 per ounce, marking a significant rise from earlier in the year. Why I like it? Gold has historically maintained its value, making it an effective hedge against inflationary pressures. Including gold in an investment portfolio can reduce overall risk due to its low correlation with other asset classes. During geopolitical tensions and economic downturns, gold often attracts investors seeking stability. Performance. Gold prices have surged by approximately 28% since the beginning of 2025. The precious metal reached a record high in April 2025. Investment flows into gold skyrocketed in Q1 2025 compared to the same period in the previous year. Recent news. Central banks have significantly increased gold purchases since 2022, contributing to the current price rally. U.S. President Donald Trump's new tariff plans have heightened market volatility, boosting gold's appeal as a safe haven asset. Gold futures trading on the COMEX exchange showed significant activity with an open interest of 438,186 contracts. Technical analysis. The overall trend for gold remains upward, with support levels at $3,320, $3,280, and $3,240 per ounce. Key resistance is observed at $3,050 and $3,100, suggesting potential price ceilings. Analysts suggest buying gold at support levels with targets set at higher resistance points, indicating potential for further gains. Analyst expectations. Analysts project gold prices could reach up to $3,700 by year-end, driven by sustained demand. Gold is currently rated as a buy by several financial institutions, reflecting positive sentiment. The long-term outlook for gold remains bullish, with expectations of continued appreciation. Conclusion. Investing in gold in May 2025 presents a compelling opportunity for portfolio diversification and risk mitigation. With its strong performance, increased demand, and favorable technical indicators, gold continues to be a valuable asset for investors seeking stability amid economic uncertainties. Now passing to cryptocurrency investment, Bitcoin, BTC. Bitcoin is the world's first and most prominent cryptocurrency, often referred to as digital gold. It operates on a decentralized network, allowing peer-to-peer transactions without intermediaries. Current price, approximately $94,800 per BTC. Why I like it? Major firms like Morgan Stanley are introducing spot cryptocurrency trading, increasing accessibility. The introduction of Bitcoin ETFs has facilitated greater investment access. Bitcoin's dominance in the crypto market has reached 64%, the highest since 2021. Increasingly viewed as a hedge against market volatility. Performance. Bitcoin has rebounded significantly, its highest in over 2 months and edging closer to the psychological $100,000 mark. Recent news. Bitcoin's surge is attributed to reports of Morgan Stanley introducing spot cryptocurrency trading and MicroStrategy's plans to buy more via a $21 billion equity offering. Technical analysis. Bitcoin recently broke out from a descending channel and pennant pattern, signaling bullish momentum. Critical resistance levels lie at $100,000 and $107,000, while support levels to watch during pullbacks are $92,000 and $85,000. Analyst expectations. Analysts project Bitcoin to reach between $180,000 and $200,000 by the end of 2025, driven by finite supply and rising institutional demand. Conclusion. Bitcoin remains a compelling investment for those seeking exposure to the cryptocurrency market, offering potential for significant returns. Passing to the next item, the book. For this week I choose Twist. Twist is a 2025 literary fiction novel by acclaimed Irish author Colm McCann, released in March 2025 by Random House in the United States and Bloomsbury in the United Kingdom. The narrative follows Irish journalist Anthony Fennell as he embarks on a journey aboard a cable-laying ship to document submarine communications cables. Throughout the voyage, Fennell forms deep connections with the crew and confronts personal traumas, weaving a story that explores human resilience and the complexities of interpersonal relationships. Current price. The first edition hardcover of Twist is currently available for below $115, depending on the retailer and condition. This price point offers an accessible entry for collectors and investors seeking potential appreciation. Why I like it. Colm McCann is a National Book Award-winning author known for his lyrical prose and profound storytelling. His previous works have garnered critical acclaim, suggesting Twist may follow a similar trajectory. The demand for first editions of Twist is gradually increasing, particularly for signed copies. First editions of McCann's earlier works have appreciated over time, suggesting a similar trend may occur with Twist. The unique narrative and McCann's reputation are attracting both literary enthusiasts and investors. Early critics have praised Twist for its emotional depth and narrative innovation, indicating strong potential for long-term appreciation. While all investments carry risk, Twist's early performance and author pedigree suggest a favorable risk-reward balance. Recent news. Colm McCann has engaged in multiple interviews discussing the inspiration and research behind Twist, increasing public interest in the novel. McCann's promotional tours have attracted significant attention, with signed copies becoming sought-after items among collectors. Twist has been featured in various literary forums and book clubs, enhancing its visibility and desirability. The novel has been nominated for several literary awards, further cementing its status as a noteworthy publication. Conclusion. Investing in the first edition of Twist by Colm McCann presents a compelling opportunity. The combination of a renowned author, unique narrative, positive early reception, and market trends favoring literary collectibles positions this book as a promising asset. At a current price point around $115, it offers accessible entry with potential for significant appreciation. At the end, let's make a short recap of the investments that I considered for Week 3. iShares MSCI USA Value Factor ETF, VLUE stable with recent recovery potential. VanEck Vector's Semiconductor UCITS ETF recent pullback after strong growth. Gold strong uptrend in 2025. Bitcoin BTC strong recovery from 2022 lows, nearing ADH again. Twist by Colm McCann steady price, increasing literary interest. What do you think about this week's picks? Got a stock, crypto, or even a collectible you believe in? Drop it in the comments. Let's keep growing together. If you found this helpful, give it a like, maybe share it with a friend, and hit that subscribe button if you haven't already. Until next week, stay curious, invest wisely, and remember, this is Easy Invest and Thrive. Take care.